Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, yesterday there was no surprises from the minutes from the RBA statement after its meeting a fortnight ago, and the central bank still maintains to its wait and see approach for its monetary policy, although the RBA hinted it would keep to an easing bias while it waits for further economic data. Now this looks towards this Thursday, and we'll get an update on the health of the economy when the Australian August employment and jobless data is released by the Australian Bureau of Statistics. The market forecast holds to 15,000.2 jobs, with the employment rate remaining steady at 5.2. Any surprises from these numbers to a lower case, that is of 15,000.2, may spark a rate cut debate either in October or November. At present, 60% is priced in for October and 100% for a rate cut in November. The Australian dollar slipped on the announcement from the minutes and fell to a low of 68.29 and respected the trigger level at 68.25. We are still waiting for this level to break, and from the rejection has posted a dragonfly doji. I'm a little bit cautious in my bearish call, but still view towards 68.80 to 95 as a cap and expect eventually for another downside test and take out 68.25 to expose a region of 67 to 66 cents. The bulls returned overnight for the euro, and now looking back to the resistant level 111 figure 15. I still expect this level to hold. The indicators aren't giving away too much to support an upside case, only to the fact that the MACD does hold slightly to a bullish case. Now a break above 111.15 could see stops up towards 111.80.85, but while intact, and I feel this most probably will hold, then we are looking back to the downside region of 109.35. Well, the dollar yen took the challenge to the upside and ended by posting a doji, and from the rejection of 108.30-40 level, the market is now poised for maybe a test down. I do believe the market is struggling at or around 108, and we should see from a break of 107.80 for a further decline down to 106.70. The pound has regained its momentum as mainly viewed from the RSI, failing to break through the midway point, is now looking back to the level of 125.20 after contesting a high of 125.26 overnight. Although the market is still somewhat a little bit on the hesitant side to take the rally further, we can still see a break from a clear break, that is, from 125.20 up towards the level of maybe 125.70 to 126.60.80. Wait for the break though, because a rejection from here could easily see the market fall back towards the bottom side of the range, which is seen at 122.40.60. Well, the gold outlook is pretty much unchanged as it now flirts around the level of 1,500. Tomorrow morning at 4 a.m. Sydney time, the Federal Reserve is expected to cut interest rates for the second time in a decade, but Fed Chairman's statement after the rate announcement is unlikely to deliver the message market participants want to hear on plans of future rate cuts, and we could see a slightly neutral stance after the announcement. Gold bulls are still looking to see a rise, but we need to see a move through 1,512 to trigger the rally. If so, then this would expose the region back towards 24 or maybe higher. Do be on your guard though, in case we do see a drop through 90, as we could see a challenge down towards the level of 1,478 to 84. Wrapping up with oil, well, after this very long-legged doji, the market has actually plummeted overnight of around 6% after Saudi Arabia said it would have more output capability by the end of this month, after the attacks, that is, from the weekend, which knocked out half of its production. Because we took out the level of 58.40, I'm now sitting neutral. I'd rather sit out and see how the market plays in case it does fall further and fills this gap, which can fall all the way back down to $54 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to this new day.